Hey traders, welcome to Charts and Coffee. Hope everyone is having, well, I can't say good, I can't say bad. It's just an interesting morning that we're dealing with. Remember, gang, good and bad, and I think this is probably as good a timed conversation as there can be. Good and bad is relative to the direction you're trading in, the time-based outlook you have. One trader's crash is another trader's treasure. If you think about the different time frames that we could take advantage of, if you think about the different movement in any market, money never goes under the mattress. It's flowing somewhere, right? Our job is to find it. If it's flowing downward and you're a bear, you prefer the short side, awesome. If you're a bull, you're asking yourself, where are traders running for cover? A lot of what I've done through Q1, remember, gang, the tariff narrative is not a new one. It definitely started playing out in mid-February. We're testing some lows in a fairly significant way. Where we end up in relation to that March 13 low at 55.09, or whether we can stay buoyed above 5,500 on the futures, definitely worth keeping an eye on. Don't make as much of the gap, because everyone's going to say, oh my gosh, it's a gap down. But the question is, are we really willing to see, are we really willing, we collectively as traders and investors, are we willing to drive price through 5,500 and keep it there? We very well might. Probably the first thing that I'm thinking to myself when I look at a chart like this is right here, where a 20% pullback is. That's at 49.33. There's a lot of stocks. There are many sectors that have had a 20% pullback. The S&P has been hovering around 10, which, it's a significant, but relative to 20%, which is oftentimes called a crash versus a correction. Why these numbers? Was 9 not enough? Was 19 not scary enough? Is 11%? These percentages are completely random. They're just chosen by virtue of major psychological levels. But nonetheless, this is where we are. For traders who have been wanting to build their longer-term trading portfolio with pullbacks, this is it. When people lament, hey, I could have had this at such and such a price. This is what that feels like, right? A lot of traders lament not buying before the breakout, right? During that quiet period of time in a stock that could last years and years, whatever that might be. Maybe you're looking at DECK on that Russell, what was it? Russell 1000 name. That's a 10 bagger, right? Whatever that is. It's a huge, that's what we want. I get it. Everybody wants to buy the thing on the way up before it's really well known, but that's not always going to be the case. The rest of the time, and in the real world, we're going to have to step back and take a look at a weekly time frame. By the way, this is the weekly time frame of Apple. I don't say this to be Pollyanna. I don't say this to undermine the fear that a lot of traders have. I don't say this to undermine the fact that many traders are looking at their trading portfolios, their longer term portfolios. By the way, stop doing that. Don't do that. Don't do that. And forgetting that in 2022, Apple was at 133, right? Now, the folks who are crying, and this is where I'll be frank, they should be, are the folks that buy at new highs, right? Buy the dip gets maligned because people don't understand what it means. I want you to understand what it means, which is when we see movement like this is 2022 to the early part of this year. This is what Apple has done. And this is what I'm supposed to be freaked out about. Of course, media wants you to be freaked out about this, right? Let's take a look at the SPY. All right, here we go. 2022 to current. This is what I'm supposed to be running around in the streets with my hand in my hair screaming like the kid from Home Alone about. And maybe for some people that's true. If you bought at 600, it's probably pretty terrible. Why buy at new highs? Why avoid that? If I were to use Charlie Munger inversion theory and turn things around and say, hey, how do I ensure misery in my longer term portfolio? Easy, buy at new highs. It's really that simple. Buy at new highs, oversize, chase momentum higher. Those are all things that when you map out 12 months, 24 months, 60 months, that's not going to serve us. So these are still things that I like. Now, is it maybe a little too soon? I've been talking a long time about, hey, sell the rumor, buy the news, buy the rumor, sell the news. So hopefully everybody understands that psychology. Largely, when you perceive what was presented yesterday during the press conference, was it worse than expected? Yeah, it was worse than expected. Was most of the morning maybe hypothesizing, guessing that the tariffs would be pretty much in line with what traders were expecting, probably, right? But then once we got the detail, once traders and investors started to see, wow, this isn't what we expected. We thought certain things were going to happen. We've been selling off the equity markets since February, and I mean we collectively, right? Since mid-February, thinking that this, and this could be the case, whatever those details were. And we finally got presented with what the details actually are going to be. We forecasted one thing, we got the actual, and frankly, the actual now is landing in a way that some people thought maybe wouldn't happen. And in some ways where people thought this is way worse. I've heard a lot of folks citing things like the tariffs on certain countries that traders did not expect to be so high. Whatever that is, like everything else, right? Like everything else, people go, well, this is going to close down the economy. One of my friends, friend of a friend, texted me and said, oh, this is going to close down the economy. So guess what? We've seen that. We've been there. Happened in 2020, right? So there are frameworks that we can use moving forward. Might this take a little bit longer to understand the bearings? Is this simply a negotiation ploy where we're going to start to see the back and forth and these things get sorted out in the next, I don't know, however long it may take, 1, 2, 3 months? Is this going to be a new reality where we're going to start to see more manufacturing? I don't know. Nobody does, right? But what I've got to presume is that we've seen fear before. We've seen uncertainty before. I'm going to look back 5 and 10 years and ask myself, as a trader, this is the easy part, gang. If you're a trader, keep the trading hat on. Long, short, 1 to 3 days, maybe just today because you're a day trader, maybe going out 10 days because you're a swing trader. That's a very short-term time frame. And whether price is going up or down, if it's moving, that presents us some kind of opportunity, right? If you're a longer-term trader, this is what a sale feels like, gang, right? And if you ask yourself, if you bought the dip with the Bank of Japan rate hike sale, if you bought with back in, we had some Federal Reserve members that kind of went rogue in early Q2 of last year, created a lot of volatility, created a lot of dips. That's what this feels like, right? And the more you go through it, I'm not happy about this, but the more you go through it, the more you realize these are opportunities if you have the time frame and the setups to match. So I just wanted to make sure we tackle this because, don't look at your longer term portfolios. All-time highs cannot be sustained. Unrealized profits in a portfolio is only real when we take profit, right? So don't look at your high watermark in your trading account or in your portfolio. So that was my money. It wasn't, right? When do we care about what that money is? Right before we actually need to touch it. And if you've got someone helping you managing your portfolio and you're thinking, Rog, this is a problem for me, I needed to touch it in 1 to 2 years, I'm going to tell you what I've been doing with my family for years. Whatever that I need to touch it date is, 1 to 1.5 years, 2 at most, we start making plans about preparing for that. So nobody here should be thinking, oh my gosh, this was the year I needed to touch my capital. This was the year I wanted to touch maybe some of the growth in my account. And I don't mean to be salt in a wound, but this is where going forward, if you know that, hey, 2025 is a year that I need to touch some of this capital in a long-term account, 2023 is when the plans start being made. So keep those things in mind because this won't be the last time we see volatility like this, especially if you've been trading for any length of time. This will be 33 or 34 years I'm at this now. This is many, many, many times I've seen this. And this is when I know it doesn't help the way a lot of folks might be feeling today, but I like this chart. It's a very grounding chart. This goes back to 1985. There's always a reason to sell. And this is a chart of the S&P. Look at all the reasons, right? Is this going to be, if we were to redo this chart 12 or 18 months from now, right? Is that going to be yet another blue label of, the tariff tantrum? So these are things to keep in mind. All right. So with that being said, NVIDIA is a question here on the morning. Again, if I'm looking longer term, couple things I'll start with. Is Nvidia down at least 10 to 20%? Nvidia is down below 20. I'd leave semiconductors like Nvidia alone for now. However, if you've been waiting for an opportunity to buy Nvidia and someone tells you, hey, this thing's down 22% from the highs, right? Two things should happen. One, well, why is it down 22% from the high? Why is it down so much more than, say, other names? And the other thing is, if you want to buy Nvidia, yeah, you're gonna be far better off buying 22% from the high than the high itself. So if there are different levels that you're interested in, yeah, this is the way you go about doing it. I would leave semiconductors alone, gang. I'm not saying go buy this week. I'm saying we've been saying this for weeks. Put a watch list together. Put a list together. Again, the best I can do is show you the things that I'm actually doing. In the Sector Secrets Mastery, we bought Altria back the first or what was it? Second week of January. So we've been in since January in Altria, right? Not because the news that surrounded the sell-off was particularly bullish, but because I followed a set of setups, I followed a set of criteria that said, hey, this is where, with a longer-term perspective, you buy Coke. We bought Coke as well. We have Altria from 51.50. I think we have Coke from 61.50, right? So there are things that we've built long positions in. And in both these cases, obviously it was a dip that was bought. Was it on good news? Was it something that made you feel good about buying Coke or Altria? Of course not, because that's the way dips tend to feel. We weren't in a rush. We picked a spot. We looked at the criteria. We have a level. So right now, put the watch list together. Put a wish list together and say, gosh, if only I could have bought this stock at this price. Write that down. Make a list. Put together a set of charts. And then step back and ask yourself, are those 10 and 20% pullbacks? And is there an opportunity? So I really don't want anyone here in the fetal position, in the corner of the office going, oh my gosh, because that's just a lack of a plan. Hopefully I'm giving you one and have been giving you one for weeks, which is trade, right? Our trading account has nothing to do with longer term tariff implications, gang. If you're a day trader, you don't give a rip about the tariff narrative. You're in today, out today, in today, out today. That's where it's kind of laughable, the folks who are upset. Now, I just came back from a mastermind a couple of weeks ago with a lot of business owners, right? If I'm sitting with you, all however many hundreds of us, and we're talking about business, this is a very different conversation. I completely acknowledge, yeah, there's a lot of scary things going on if you're a business owner right now. But you and I are not sitting down in a business owner mastermind. We're traders. This is a trader's mastermind. Different set of criteria. So all the other facets of your life, all the other things that you do have to be concerned about if you're a trader and a business owner, you have to compartmentalize, because the things that affect you as a trader are very, very different. And the things that affect you as an investor are or longer term, I like to call them position trades, are very, very different. So if you're going to carry in, whatever it may be, fear, business, politics, there's no place in that in trading. I know immediately a losing trader when I hear them ranting on and on about things that have nothing to do with getting long or getting short. And then I realize, oh, they can't compartmentalize. They're bringing the baggage in of other facets of their life. We all have them. Just got to leave them at the door. So remember, if you're looking longer term, rather than saying, oh my gosh, I'm off the all-time highs, please step back and look at what the stock market has done for the last 2 or 3 years or 5 years. Right? And remember, hey, dips are going to happen. Nothing goes straight up. And are these opportunities in the stocks that you want to put in your account? All right. So that's really it. I don't look at this as anything other than price action. There's some price action we like. There's some price action we don't like. But whether you like it or not is just a matter of your time frame and your time horizon. SPY, if this thing pulls back 20%, I'll tell you right now, if this thing hits 490.5, I will buy some. That's been something that I've been doing for a long time. A 20% pullback on the SPY with a 12 to 18 month time horizon. Heck yeah, I'm going to buy some. Does that fit for your risk profile? Don't know. Does that fit in, say, a time horizon of when you might need to touch the capital? This is why it's not advice, but I'll tell you that's what I'm going to do. I'm going to be 54 this year. I've got time. Buying a 20% dip in the SPY at 54. I'm going to be 54. Plenty of time to see that appreciate, right? So again, think about that time horizon. Ultimately, trade the rest of it. If it's weak, we go short. We buy long puts. If it's strong, think about the weekly time frames. Look at where you can go long. There's never, ever a reason to say there's nothing to do. There might be less to do, but there's never, ever a reason that there's nothing to do. Will I still be buying different stocks? Oh, yeah, we put a list together. So, yeah, for those of you wondering, Rod, what did you do? We know you have a list. I'll tell you right now. We bought Coke in January. We bought Altria in January. We bought Walmart in March. So we're long Walmart. And this is going to be the tricky one. And I do have XLC. I do have telecommunications. So that's probably the most, those are the 4 positions that I built in Q1. And these were all alerts that I sent out in the sector Secrets Mastery. These are all position trades that have 6-month minimum to multiple year time horizons. And just to give you an example, we did the same thing with, actually I have this list here. Let me give you a few things that we did, a little bit, we go back in time a little bit. Let's see. I'm going to go back to say to 2023. 2023, what did we buy in 2023 or even 2022? We just bought financial. Actually, here's one. We just bought financials on this dip back in here in last summer. And there was actually another opportunity to do so. There might be another one shaping up. This happened in March. So this is what a dip looked like and this would have been August of last year. So some of these are relatively recent, but I'm looking at that 6-month longer term time horizon. What else do I have here? We have Google. So you might say, Rob, what about tech? Yeah, we have some Google. We bought Google back in September of last year, and that's pretty much where we bought it. So are there going to be situations? So this is where I will say, hey, we bought this at 150. There we go, 152.5. It went all the way up to over 200, and now it's back to 152.5. Well, this position is, from September of last year. It's in that 6-month window. It's not as if I'm happy about this, but am I down from 200? Gosh, no. If we're sitting at 150.10 right now, I'm taking $2.40 per share of heat. That's it. Not $50 of heat. This is where traders get in trouble. They buy new highs, 190. They buy new highs, 200. And when this happens, now they're underwater in a significant way. If you buy the dips, like we did when we bought this in September at 152.50, and something like this happens, let's face it, this is pretty dramatic, but I like using a dramatic example. Am I underwater on the position? Barely. Am I going to be stopped out of this position? No. If I see that this position cannot rally, and this is since September, so September, October, November, December, January, February, right? At that February mark, I'm asking myself, where am I in terms of a return? I could cut this for no other reason that 6 months into having the position, it's unappreciated a certain amount. And these are all things that I teach in the mastery. What is the risk per share? What is the reward per share that I'm willing to? And so for some traders, Google could have been a cut come February, end of February, because in terms of having that 5 or 6 month appreciation, one of the things a lot of investors do is when they buy something, they hold it forever. I'm not going to ever recommend that. So put that list together. There are approaches. I know I'm kind of giving you all a little bit of what we do in the mastery, but hopefully this will whet your appetite for what's possible. If the current environment, there's something that's a massive opportunity that's starting to present itself, but you don't have a plan. This is going to be one of those opportunities, gang. There's been so many reasons to panic. And yes, the sky is falling. It hasn't fallen yet, right? And I think we've dealt with far worse. We've had China trade wars before, right? We've had government shutdowns before. We've had economic shutdowns before, all right? This will be yet another label 2 years from now where we have here tariff tantrum. And of course, that was the end of everything, right? So keep in mind, there's a natural drift. Let's take advantage of it. Let's stay optimistic. All right, gang, be good to each other. I'll talk with you tomorrow.